Well, there are no inflation worries when it comes to online shopping. With more people than ever buying through the web, FedEx is doing more ground shipping to their homes and delivering more profits to investors. FedEx posted strong quarterly earnings today with net income up 24%. Shares rose more than 3%, and they're up 11% so far this year. So what's FedEx doing right? Morgan Brennan takes a look.
Profit at the world's #2 shipper jumped 24% from last year as sales increased in all of its major divisions, ground freight and express. Several factors played a role, including cost-cutting program and increased e-commerce shipments. The strong beat is a good sign for the economy since FedEx and its competitors are considered bellwethers of growth. And it comes on the heels of an announced 5% rate hike for all of the company's North American operations. That will begin right behind the holiday season on January 5th, the same day new dimensional rates tied to box size also take effect.
FedEx is now beginning to take a leadership position from a pricing standpoint. Typically, they don't increase their ground rates before UPS, but this year they moved it up 3 months and did so before UPS. And I think they're frankly becoming a little bit more of a leader in that respect because they did not have the service problems that UPS had last year.
The company says the increases are, quote, appropriate given current market conditions. Analysts expect the rates to stick because the number of packages being shipped is growing and capacity remains tight. But before those higher prices kick in, FedEx has something else to focus on first: the holidays. The company expects to set another record for peak season shipping volumes and is hiring more than 50,000 temporary workers to do so, more than double last year, though still far less than the 95,000 workers being brought on board by competitor UPS.
They did not have service problems around the holidays, despite the snow, despite the ice, and UPS did. And I know the weather was a factor, but the bottom line is the little ice and snow clouds did not follow around the UPS trucks and ignore the FedEx trucks. FedEx got it delivered over the holidays, and I think that's benefiting them in both volume and pricing power today.
That's why FedEx is reiterating an ambitious earnings forecast, setting up what many analysts believe could be a turnaround year. But this is all going to come down to several factors: fuel prices remaining relatively low, continued economic growth, and of course, the weather, especially as children once again make their wish lists for Santa. For Nightly Business Report, I'm Morgan Brennan in Fort Lee, New Jersey.